Hey everyone, it's Denise Donahue, your favorite mortgage nerd. Today is Thursday. It's the 3rd of May, new month, almost halfway through the year. As you guys know, I give you current interest rate updates every single week. I'm committed to doing that to keep my clients informed. Those of you who are possibly just got pre-qualified or in the market, you need to stay alert and pay attention to rates. Some of you guys may already be under contract and your home is being built. And some of you guys might just be window shopping, but every single week I like to show you guys what's going on with the interest rate market. For those of you who've been tuning in, you know that really what that means is that I'm monitoring the bond market. And that's what you're looking at right now on my screen. So this is the bond market. Interest rates have an inverse relationship with the mortgage bonds. What that means is when the bond prices are up, interest rates go down and vice versa. So what we're looking at on the screen right here is a 1 month look back of what bonds have been doing. So you can see down here it says February 5th and it goes all the way up to May 3rd and it gives us a look back. Now, I'm sorry, that's a 3 month. If we go back to this max button, if we look at towards the end of December, which is this point here, that's where the price of mortgage bonds were. It was hovering right around about 102. What that means in layman terms is that you could sell a bond for $102. But what we saw happen towards the end and beginning of the year is you see that big line that goes down all the way till about the middle of February, the price of the bond dropped to 99. And so that's why we've seen an increase in the rates. Towards the end of the year in December, the 30-year fixed rates were still in the high 3% range. But what we've seen lately is that this line just dips and then it kind of mellowed out a little bit, which you can see here. And then look what happened. At about the middle of April, around the April 19th, 20th, we saw another dip down. And here's where we are right now. So this increased dip is why interest rates went up a little bit. And so it's kind of a shock to people right now. You know, some of us are still thinking, because we haven't been paying attention to rates, that they're still in the 3% range. And so when we start shopping interest rates for you, can be a bit of a shock. One of the things that I do is I have the ability to shop over 32 banks to make sure we find the best interest rate. But you have to have a good understanding. So I always just like to pick on Wells Fargo. We shop all the big banks, but if you look at Wells Fargo's rates today, they're showing the 30-year fixed rate starting out at a 4.75%. VA is 4.5%. Their 15 years 4.25%. So literally, as we all know, what marketing people do is they're going to show you best case scenario. The 4.75, when you read the fine print, includes a little bit of discount points and assumes a 740 credit score. So if your credit score isn't 740, look at the videos below on my website. It shows you what the tiers are and how that impacts not only your interest rate, but also your PMI insurance. I won't go into it now because this is an interest rate update. But I wanted to show you guys that this is legitimately what's going on in the marketplace. And so if we go back to these rates and we look at just the last 10 days, I like to look at the month view. What we see is that the line kind of went down a little bit. It's gone up. Now, yesterday was a big day. We all know that the Feds got together and a bunch of us were anticipating whether or not they were going to come to the conclusion to increase the federal funds rate. 86% of the economists were predicting that it wasn't going to happen. They think it's going to happen in June. But the federal funds rate doesn't have a direct relationship with these mortgage bonds. The federal funds rate has to do with car loans, business loans, credit cards, things like that. There's still an indirect impact to the mortgage rates themselves. But with yesterday's news, we saw the market open up today here, which means it's looking like interest rates might actually go down a little bit. We've got to keep an eye on it because literally people ask me, do interest rates really change every day? Yes, look at this. This is the movement every single day. So it's really important that you hire a certified mortgage planner that watches the market, that can tell you when to lock your loan. I had a couple of clients that went under contract here, and I said, we're not going to lock your interest rate in. We waited to lock the interest rate in. We might actually lock it today because I think we're going to see another head and shoulders trend here for a while like we saw here. Whereas head and shoulders, that's what we call it when it's just a small up and down movement, not something like this where it's drastic. So anyways, if you have any interest rate questions, let me know. You know how to get a hold of us. Just click on the homepage of my website. You can call, email, text, whatever you prefer. On my website, we also post what the current weekly Freddie Mac interest rates are. That's what tells us what interest rates are starting out at, what the banks are borrowing. So I'm committed to giving you current, real, live, up-to-date information. Make sure you follow my Facebook page because every once in a while I'll give even more updates there. So you can follow me at The Mortgage Nerd. And if you need anything else, let me know. Have a great weekend. Cinco de Mayo. Be good. Hopefully this weather clears up. Take care.